Hey everybody, welcome to Livestream. I'm gonna change it. Instead of two $20 gift cards, I'm gonna do four $10 gift cards. So if you win, I can just do a DCF, one DCF, or you can get the Amazon gift card. I can email it to you. But this way we get more winners, and a lot of people want me to do the DCF anyway, because I used to do a $20 Amazon gift card, and a lot of the winners just took two DCFs. So happy July 4th weekend. Thanks for joining. Chin. Yeah, leave a comment so I know you're here and I can add you to the raffle. Hey Doc, what's up? I hope I could get more, make more money on the channel, because I would do more giveaways. I'd be happy to do like $100 giveaways. I'll like maybe Mr. Beast, I'll give $100,000 out to somebody. But I'll never get that big. But on my old channel, I used to do pretty big giveaways, like a few $100s each time. But it was different. I would buy lotto scratch offs, and sometimes the winner would win the scratch off. You know what? I get a little confused with Yacero, with MLPs. I think I understand them, but I always get people commenting, and I wish I could talk to an accountant that really understands these things, because when I talk to CPAs, I feel like what I ask is kind of too complicated for them. Like it's always so kind of deep within accounting. Like I get basic accounting pretty well, but when I ask them, like, because MLPs, and feel free to chime in, MLPs, you don't own stock in a company when you own an MLP. Because when you own stock in a company like Microsoft, I don't know how to explain exactly. Like you have no. I mean, they're pretty similar. I guess it's just the way they're structured for tax purposes. But there is no equity. If you go to the balance sheet for an MLP, I could show you right now. They don't have any equity because there's no such thing. ET is an MLP. The end result is pretty much the same thing. It's not like you end up with the same money. But if you go to any MLP and you go to their equity section, there's no equity because they're not stocks. They call it partnership capital. If you look, you could look on the 10K and it'll be the same thing. So the partners own the company. So I own stock in ET, Energy Transfer. So I'm a partner of the company. That's why at the end of the accounting year, I get a K1 tax form, which is it's kind of like if me and you and a bunch of people started our own business, we might also we're partners in the business, and we might have to fill out a K1 for that business to report our earnings from the business. The same thing with this, with MLP. Tampa, what's up? So pretty much when you own an MLP or REIT or a BDC, you pretty much pay the higher tax rate, the ordinary income taxes, or ordinary dividends, but some people don't think that. They say you don't pay, you pay long-term capital gains. It's a because the way it works is like when there's depreciation or there's write-offs, like if you own Microsoft and they write off, say they acquired a company and then they write off the goodwill, that's passed through on the income statement. It's it affects the corporation. But when an MLP has like write-offs, they spread it out to you, the partner, so you can take those write-offs and apply them to your taxes. I don't know. I guess if anybody has more color on it, most of the distributions you receive from MLP are taxed at the higher tax rate, but you do pay some at the lower tax rate. If you can, do you agree with me? Because well, leave a comment. Yeah, a couple of comments on the last video. I forget which one it was. Let me see. But if you own an MLP in a retirement account, you actually have to pay taxes on it, even though it's in a retirement account. Any stock, a regular stock in a retirement account, you don't have to pay anything on it. If you receive dividends, you don't pay any taxes until you take the money out of the retirement account. So the money just sits in there and can grow tax-free. Not with an MLP though. So it's recommended not to have MLPs in a retirement account for that reason. So which one was it? Was it Enterprise? I think it might have been Enterprise. I got the comments. What city are you in? San Francisco. Right now. Well, I'm from New York. See, someone said, I love the dividend until I was taxed 37% because it's distribution. Exactly. He said it's a distribution. It's not a dividend because you're a partner in a company, so you don't get dividends. You get a distribution of the profits of the entire company. Yeah, this person, why are you misleading the audience about the taxation of MLP dividends? They are not taxed higher. They're actually considered redistribution and they are not taxed. I don't understand. This is like, I could understand people saying you pay the lower tax rate, not the higher tax rate, but he's saying they're not taxed. Unless he means something else, but how could you have an investment and not get taxed? Everybody would be buying it. Bulldog. Everybody check out Bulldog's channel. He does 24/7 live streams. Yeah, I don't know. You smoking? That was the only response I come up with. I usually don't I usually kind of respond seriously, but it doesn't. I mean, not get taxed. He must have meant something else, because you have to get taxed anytime you receive money. You get taxed. That's how it is, especially in the United States. I don't know about other countries. I know it's a little more. They're more lenient, but in U.S., if you get money, almost anything, it's like you can't avoid taxes. But I write notes. I have a lot of notes and everything. It's interesting. So I wrote my notes about MLPs. Like, I keep adding notes on things. I have probably thousands of topics in my phone, but so depreciation and depletion are passed through to unit holders, because you're a unit holder. That's the term, I guess, the accounting term. You're a unit holder, not a stockholder. Just like if we started our own private business, and we can't sell stock, we could sell units in the business. I mean, it's some people call it stock still, but it's not stock. Okay, well, depreciation and depletion are passed through to the unit holders, who can use these deductions to reduce their taxable income. Do you guys know what depletion is? There's amortization, depreciation, depletion. One. So amortization is amortization and depreciation are pretty similar. So if you own if you have a patent, you may amortize it. Like, if you have a patent, you carry it on your balance sheet as an asset, and you amortize it. So maybe if you have a patent and it's valued at $100 million, say over 50 years, you amortize it $2 million a year for 50 years. So each year you reduce it $2 million till it's to zero. So amortization is only for intangibles. So not all intangibles are amortized. Like goodwill is not amortized. Let me see. I can't remember I forget the year they changed the rule. FASB changed the rule for goodwill. (2004). So in 2004, and before they were amortizing goodwill, but they changed it to they have to test now annually for impairment. So goodwill can sit on the balance sheet forever, and never change. You could just set the same value potentially, but every year you test goodwill for impairment, and if you decide to impair it, then you reduce the value on the balance sheet and pass through a loss onto your income statement. So amortization is only for intangibles, but not every intangible is amortized, like goodwill. Depreciation is only for tangible assets, like buildings or vehicles or equipment. But the same thing, if you buy a building for $100 million, say over 20 years, you depreciate it. So every year you knock off 5 million until it's down to zero. After year one, it's 95 million. So only tangible assets are depreciated, but not every tangible asset is depreciated. Do you know what the common tangible asset that does not get depreciated? Probably someone knows. There's one asset that never gets depreciated. It generally stays on the balance sheet at that value. It may go down if you impair it, but it won't go up. Land, yeah, land is never depreciated, which makes sense because you can't really. There's no wear and tear on land. Like if you build a building like a 50-foot skyscraper, it does depreciate over time. It may start to decay, or some of the stuff you use to build it or become obsolete. Like if you looked at a home 50, 60 years ago, maybe some of the stuff they use in the home is not used anymore. So depreciation is for wear and tear. Land can't really, it's always going to be there. It's not going to change. Does anybody know what depletion is? I actually wasn't too sure what depletion was until I started the channel. Now I understand it. Does anybody know what depletion is, or what assets get depleted? I mean, or examples of what gets depleted? I just want to see if there's any other tangible assets that generally don't get depreciated. I think it's just land, but I wonder if there's any. I don't think there's any others. Yeah, a mine, exactly. A mine is a great example. Let me just check. Yeah, so if you buy if you buy the rights to a gold mine, or it could be other natural resources. Like if you buy the rights to a location to pull oil, and say there's like 100 million, I'm just making up numbers, pounds of gold at a location. And say just argument's sake, you paid $100 million for this, the rights for this location. So you pay $100 million for rights of location, and you expect 100 million pounds of gold. And the numbers don't make sense, I know, but just so your balance sheet, you have to record an asset of $100 million on your balance sheet because that's value, that just having that rights at location. And say after 1 year, you depleted or you pulled 20 million pounds of gold after 1 year. So you have to knock down the value in your balance sheet to 80 million, from 100 million to 80 million, because the asset has become depleted. So there's no set schedule. So it could take you 10 years to deplete the entire, all the gold reserves at that location, or it could take you 2 years. So it's not like a set schedule like depreciation. It's only for natural resources, exactly. So it could be any gold, oil, any commodity, timber. I don't know. How do we get on a tangent? But yeah, so if you want me to do DCF, you can donate. I only have 9. Buster. We'll do 4 $10. Yeah. So I give pretty simple examples, but it's not that straightforward. Like Savvy's saying, if there was $100 million worth of gold at a location, that's what you thought. But once you do more research, you find out there's actually $50 million instead of 100 million. So you might have to deplete it before you even pull anything. Savvy money. So I could do a DCF right now. It takes like 5 minutes, or I could send you a $10 Amazon gift card, or I can. That's it. Those are the 2 options. And this is what I thought was interesting with an MLP. Because people were asking, like, why do I have to pay taxes even though I have in my MLP in a retirement account? So I wrote. So yeah, if you hold an MLP in a retirement account, like a Roth, and if you receive more than 1,000 of dividends, it's considered UBTI, unrelated business taxable income. So UBTI is subject to immediate tax. Most other investments that you hold an IRA are tax deferred, but UBTI is subject to immediate tax. So you have to pay the taxes. So if you had a lot of, like, you own like a ton of MLP stock in a retirement account, you might have to come up with a lot of cash to pay the taxes, or sell it, or you might have to sell your stock, which would suck because you shouldn't be selling stock before you retire. Then you get penalized. It's almost like paying half price, 50% of your any gains you have to pay in taxes. So that's why you get taxed if it's in a retirement account. If you only have a few shares and you get a couple $100 a year, you're not gonna get, you don't have to pay anything. Yeah, EPD is MLP. I'm just talking about a retirement account. But if you own MLPs in a non-retirement account, it's just like regular dividends. You just have to file a Form K1. But the same kind of concept. You still have to pay taxes on how much money you earn from that investment. It's just a little more. It's just a little different because you have to follow that K1 form. It's pretty easy. It's not that complicated. It's just, especially if you have an accountant, then you just give it to the accountant. So they just have to. Thank you, Omari RCII. Oh yeah, ask anything you want. I'll try to answer it. Or Savvy IonQ. IonQ. 8.3. Why Intel keeps going down if their fundamentals are very solid? Well, I mean, that's not as straightforward as a simple accounting question, but yeah, I mean, who knows? Why do stocks go down? Stocks don't go up or down based on the fundamentals. That's just a function. I mean, if a company is really profitable, they're probably going to go up, but they don't have to. It might go down, or a company can lose a ton of money. I mean, you would think they would go down, and some go up. So it's just supply demand, what people are willing to pay. So people look towards the future. Even if a company's profitable now, they may think in a few years the company's going to be out of business because their product will be obsolete. But generally, over time, if you invest in a company that's profitable, the stock, you should make money. And over time, if you invest in stocks that are crap, you're probably going to lose money. But that's the, there's no like guarantee that's going to happen. You could lose a ton of money investing in certain stocks. So sometimes you just get lucky. It's like if you happen to buy the scratch off, that's the next $1 million winner. It's just, you just got lucky. $10 million. What am I doing? $19 million. $19 million. And 200. What the fuck? 53 million. $53 million. 10 million, 19 million, 53 million. Yeah, if you invest over a long horizon, like 20, 30 years, investing will make sense. But if you try to understand it in like a particular quarter or year, it's not going to make sense. Computer hardware. What the hell? But this is a great time to buy. The stocks are getting low. It's a really good time to buy. A lot of discounts. Usually when a company starts, their revenue starts to like plateau or even start to decline a little bit, that's when their stock price starts coming down. If a company had a 20% revenue growth for like 10 straight years, and then they went down to 10%, they're still usually profitable. Then the stock price starts coming down, and people ask, why is stock price decreasing when they're so profitable? Because when they start to see a decline, you just assume it's going to keep declining. If it's their revenue is growing at 10%, next year it's going to grow at 8%, then 6%. You want to catch it on the way up before it plateaus. Like with Tesla, people were investing so heavily in Tesla. So you needed to invest in Tesla like 5 years ago and even deal with the ups and downs. SKM? IonQ. Yeah, so they're not really too profitable yet. I'm at 63 cents a share, trading at 439. Their revenue is expected to grow to over 50 million in 3 years. They're only at 4 million. Ed, what's up? Okay. So yeah, we can't. Their ratios aren't so good. That's why stocks like Nvidia was so hot, because they were growing so much, even though their revenue was so much lower than Intel's. Wikichu. Rent-A-Center. 8.3. Rent-A-Center. Rental and leasing services. So we did one raffle. We'll do 3 more, since we're doing 10 each. If you want to donate, you could donate any amount, but if you donate 5 or more, I'll do a DCF. I put everything I have into Google when it hits 1800, or should I spread it out? I'd probably spread it out, because if you pick the right company, then yeah, of course you want to put everything in. But like all those people who invested in Berkshire Hathaway in like the 80s, 90s, you know, they're super rich. But who knew it? You know, what if you invested all your money in like Enron or Lehman Brothers? It's just so. Because if you look at all the biggest companies 20 years ago, some of those companies aren't even that big anymore. Eve L. So if you really want to, if your goal is to like 10x your money or 20x your money, of course we all want to like make 1,000% return. But most of us invest thinking that a 10% is appropriate as long as we keep doing that. But if your goal is to 50x your money, then you want to probably find a company that's losing a lot of money, that has a really high PE ratio, like over 100, like 1,000 PE ratio. A really, really risky stock. Because if you're looking for good values, you're probably not going to double or triple your money. You may, but your goal should be at like 10%. limit your losses, and which also limits your gains. It seems really undervalued. Let me raise the whack. Let's just pretend revenue doesn't even grow much. It's flat. It seems really undervalued. Richard, what's up? Collins. Okay. Wow, they're really good price to free cash flow, 3. Jeez. Their revenue growth rate is 10%, which is good. What the fuck? Yeah, Intel's really. Yeah, Intel in like 2000, it was the largest semiconductor company. It was like larger than the others, all the others combined. Now it's a lot smaller. Like ever since like 2001, I mean, you could see from 2001 to 2017, so 16 years of no growth really. It declined. Like it was up at 45, and then for 16 years, it never broke through that $45 range. It did. Well, it did get up to 70. I like Intel. But yeah, I'm nervous too. Like it goes down. Like if you compare it to most other, what's a good semiconductor? Marvell. Like a company like Marvell, which is, a middle-sized semiconductor company. They're no Nvidia or Taiwan Semiconductor. They're not even close to as big as those companies. Even that in the past 5 years is up 150%, while Intel is up 8%. So, I mean, so people have been thinking for a long time, Intel is not going to be big. It's going to start declining or possibly go out of business. Even though their revenue keeps going up, when Didn't they spin off Mobileye already? I don't know. I thought they did already. Mobileye. So in March they filed for the IPO. I guess it's later on in the year. They did all the filing, but I guess the actual IPO is gonna. Yeah, maybe that'll help the stock price. It's just news stories move stocks in the short term, like momentum and news stories, things like that. There's no fundamentals, hopefully in the long run, but it's hard. It's hard to sit on a stock for 10, 20 years and not see any results. I mean, it was Tesla wasn't like always a booming stock. It was I remember in 2017 it was $66. So it was 40 in 2015. So unless you caught it at one of these lows, like if you happen to buy it in middle of 2017, say you like Tesla a lot, middle of 2017, you got it at $60 or $70. Let's say you waited 6 months, which is probably more than most people wait. You're down like 10%. So you wait another 6 months. So from June, you're down like 5%. Then you wait another 6 months. You're still down 5%, which is the end of 2018. So middle of 2019, okay, there was a big dip, which probably stressed you out a lot. You were down 50%. Then it came back up. So you're down like 40% after what, 2 years? I mean, so unless you bought it around here and waited it out, like that's the thing. You could sit on stocks for years and there's never momentum. Or you could sit on stocks, or there may never be momentum. This may be so inflated, we may see Tesla go back down to 100. We'll find out in a few years. If they keep growing their revenue, it could keep going, at least going up, or not really going down. But if they start to, if competition comes in, the stock could definitely come back down to 200 million market cap. Okay. SKM. SKM. Bond zone. I don't own crypto. I mean, I'm not sure if I don't think anything's wrong with crypto, but I don't own any. I mean, I wish I bought it like a while back, I could have made a ton of money, but I think Bitcoin is a decent investment. I don't think that's going anywhere, but most crypto I probably would avoid. Let's get to 18. Tesla could get super ugly soon. Um, okay. I would avoid leveraged ETFs. Those are really risky. If you time it right, you can make a ton of money, but you're probably going to lose your money, most of it. You got calls in SQQ? You're probably doing well with that. It depends when you bought it, but right, QE can really boost the stock market again. That's a great band-aid for the economy. They've been doing it forever, so why stop now? MSB. Is that just right? Something looks wrong. Oh no, it looks right. I'll be right back. Okay. MSB. I had to do some conversions because it's in Korean ones. So is anybody familiar with maybe South Korean? I know it's spelled won. Wait, it's South Korean ones, not won. What? Am I saying that right? I think I'm saying that right. If anybody's from South Korea, it's pronounced ones, right? Like the number ones. Okay. So not too surprised. It's undervalued. This is the kind of stock you would expect to be undervalued because it's a big company. It's been around a while, and it's probably not growing much anymore. Like you see, their 5-year annual revenue growth rate is -1%. This one stat is a huge predictor. Of course, every single ratio we talk about doesn't give you information about the future. It just talks about the past. But now that we have this information, we know they're flatlining. Less people are willing to buy the stock and push the price higher. So it does appear undervalued because it's going to appear that way for a long time, unless they start growing again. But if they stay flat, like they 13.6 billion of revenue 3 years ago, now it's 13 billion. Companies generally don't grow. Their stock price comes down or stays pretty steady. So I'm at 57. Yeah, So let's see. The PE isn't so great, 27, but really good price to free cash flow, 5. Good price of sales. But also when you invest in a company that pays a dividend, that's a huge dividend, 8%. So if they did not pay a dividend, then the stock would go up 8%. It would be 8% higher this year. But if you compound that, if say they paid an annual dividend of 5%, say for the past 10 years, then their stock price should increase 5% a year, and you compound that. So that grows. So if you receive a consistent, pretty strong dividend, it's pretty unlikely you're gonna like 5x your investment, because stocks that pay dividends don't really grow much generally. They stay pretty flat. Like AT&T is a good example. But that's why people like to invest in stocks like AT&T. It gives them comfort. Dividends give them comfort. But if you look at it over, like if you in 96 until today, so 26 years, it's flat. Of course, it did have this big jump. So, if you did sell it, it would have worked out. But if you're a buy and hold person, unless you bought it before 95, there's a good chance you're down on your investment. But that's a stock price. You get the dividends too. So if you held the stock from 96 to current, you're not flat on your investment. You got your dividend payment. So you're probably up. You're probably like double or triple your investment. That's just something to consider when you invest in dividend stocks. But if you got it like in this point in the late 90s, you could be, even with the dividends, you might be down, or you might be flat, because even if you got it above 30, or even worse in the 40s, you're down a lot, or down a little bit. Okay, MSB. MSB. Sabi. Well, look at how much they're saying it's undervalued. Yeah, AT&T. Yeah, they've made a lot of mistakes. But they're still the largest telecommunications company in the world. MLP. Wasabi. Okay. Yeah. Well, now that AT&T got rid of Time Warner, they could really focus on the core business. Yeah, Lumen, great dividend. Well, like 37% revenue growth. Wow, that's pretty big. Yeah, they seem really undervalued. I wonder why. I wonder why they. Well, look at the whole industry. The price to free cash flow is 5 in the whole industry. They're 4.6. That's the thing. So sometimes you look at a company and it seems really undervalued, but then you have to consider what they do. Is the steel industry like? How do you feel the future of steel is going to be? Because that's really how the company's going to do. Is if the price of steel goes up a lot, their stock will go up a lot. But if the price of steel starts crashing, then so will their stock price. So you can see this is their stock price, and this is the price of steel. So it's pretty similar, right? So it's really, if you, at the end of 2019, steel was getting low. So if you bought the stock price at the end of 2019, I mean, it did bottom out probably due to COVID, like everything else. But if you bought it when at the end of 2019, when you felt steel was low, and then when steel got up to 6,000, then it would have been a good time to sell. So it's kind of like investing in an oil or a gold company. It's really moves with the price of the commodity. It's a little less based on fundamentals than like a regular company like Microsoft. NTR. NTR. Nutrien? Is that Nutrien? So what's the ingredient in fertilizer? What's the main ingredient? Fertilizer, potash. So this stock is correlated to the price of potash. I'll show you in a minute. I'm at 58. They're trading at 79. I mean, fertilizer is extremely important because for any farm or any company growing crops, and it's highly needed. And they're the largest producer of potash in the world, and that's the main ingredient for fertilizer. Because if you you would think this is a commodity linked business, so you have to think differently. But if this was a regular business, you would be like, wow, they really did well in beginning of this year. They must have made some big acquisitions, or their marketing started to pay off, or something clicked, you would think, if this was a regular company. But this is connected to the price of potash. So it's just the price of potash skyrocketed. In the beginning of the year. So of course their stock went up, because I mean, it pretty much costs them the same money to produce potash. It doesn't matter how much potash they could sell it for. It doesn't matter how much money they could sell it for. In order for them to produce it, it costs them pretty much the same amount of money. The only difference is what they could sell it for. So in 2021, in 2018, even in 2019, they could sell it for what, $200, and then in the beginning of 2022, it just took off. The price shot way up. So their stock price shot up because investors knew they were going to become extremely profitable because now they could sell their product. I mean, could you imagine making like a 20% profit by selling your products for $50 each? You make products and you sell them $50 each, and your profit is $20% on whatever you sell. But then you could start selling your products for triple, for $150 instead of $50. I mean, you would be making a ton of money. Your profits would go through the roof, and you don't have to spend any more money on to sell your products. Labor stays the same. Nothing's going to change. Right, Ukraine, exactly. If we could have kind of thought of this before and bought a lot of these stocks, these potash stocks, we could have made a ton of money. Mosaic is same thing. Like, you'll see their stock price skyrocket. So, because I'm looking at their financials, right? So nothing really changes on a company's financials from one day to the next. It's not like on February 23rd when they were trading at 75, and then the stock goes up in 1 month. It goes up like 40%. It's not like their revenue went up 40% within a month. I mean, nothing really changed with their. It's just the potential for great revenue is VGR. VGR. Vector Group. I worked at a company in college, Vector Marketing. Did anybody work there? Selling Cutco knives door to door. It was a popular job. A lot of college kids did that. Tobacco. That's a great business, tobacco. If you want to make money, sell a product that people are addicted to. Like, you can't sell, like, most drugs are illegal to sell, except if you're a pharmacist. But you can sell tobacco. That's legal. You could sell it to people over 18, or gambling, things people are addicted to. Those types of companies make the most money because you have to have it. You can't live without it, or at least most people can't. I guess everything getting killed though. Pharmaceutical stocks aren't doing too bad. And I was looking at Alibaba, and it looked like they were doing actually well. The stock, like I own Johnson & Johnson. I bought it in January, and I'm up a little bit. I think I got in the low 170s, and I'm up. I mean, it did go down to 160s. But that was in January before this big mess. But ever since, so a lot of pharmaceuticals seem to be doing well, like Merck and Pfizer. None of them are down. The stocks that are getting killed are the tech stocks are getting killed. And the tech stocks control the market. Like the FANG stocks, they're so big they control the market. And Nvidia too, that's down a lot, like 50%. They're just so big. They if those stocks go down, the market goes down. Even if you have small cap and mid cap stocks that are up 100%, if a Tesla or Google or Amazon or Facebook, if they go down 50%, it drags the entire market down. So this is trading. I got 1342. Really good price to free cash flow. Good PE, 7. Their revenue is declining, which is a little concerning. Because how could you be a tobacco company and have declining revenue? Like that's like, unless you unless they like divested or sold part of their business to someone else, or spun off part of their business into a. They say real estate's going to tank next. So this was in the 20s. So the peak was at 2016, 17. That was the peak. Yeah, China, Taiwan. That's another concern. If you own Taiwanese stocks or any stocks, actually, China. Aaron T. I've been doing this since the late 90s. I still can't figure it out. So, Paul P. Richie. Okay. 23 and me. Does anybody own 23 and me? What a crappy stock that is. I think that's down like 90%. Well, it was a SPAC, so it's down like 75%. Because it started at 260, so 74%. Avoid SPACs. That's save money. Avoid SPACs. There's one SPAC that's doing really well. I did a video on them. I can't remember the name. Does anybody know what I'm talking about? Bulldog. Xero. Branson. Spec. Hymns. I did hymns a while back. Did anybody watch Nathan Fielder? He had a TV show, Nathan For You. He's really funny. DWAC, that's it, DWAC. No, not DWAC, MP Materials, MP Materials. That's doing well. That's really never, I mean, you see, they all start at 10. And that's really never come down. I mean, most of them fall to like $2. What is MP Materials? What's the word? They sell special materials. What's the word? Not special. Like unique. I can't remember the name of the term they use. But Biden gave them like $50 million recently. This year, he just gave him, 35 million. Rare earth materials. Rare earth. That's the term. They mine these rare materials, and they have access to the only rare earth mine in the U.S., the Mountain Pass mine. Because Biden wants to really grow our this segment of the U.S. so we stay competitive. Eve, exactly. Magnets. So the compound is neodymium and praseodymium. Here it is, neodymium and praseodymium. They make these really high quality magnets, which can be used in things like EVs, robotics, drones. So there is use for them. It's but that's what it produces. Neodymium, praseodymium, which are used to make these really, really high quality magnets. Yeah, EV batteries, what a huge market, right? So I think 35 million he gave them. Yep, 35 million. Just gave them a check for 35 million. See, this is what moves the market. You can't invest in a company like Intel and expect to make money. Hopefully we will. I hope we do, but this kind of stuff, like 5 billion market cap. In 2019 they had under 100 million of revenue. Now it's 400 million. Still not a lot of revenue. But when Biden kind of gives his approval, that's why the stock is not going down like most SPACs do. I'm just not sure how much upside they have. We'll see. I'd probably avoid it, but it could keep going up, especially if they get these huge donations or if they get some contracts with like a Tesla or any EV company, the stock will go through the roof. Seems like Intel needs to succeed for USA. I'm going to be buying for the uncertainty period over the next few years. Yeah, I think if you want like a safe, probably hold. If you got a hold long term, Intel I think is okay. But stocks like this, like they may be big in the long term, but it's definitely it's much riskier because these companies come out all the time. These types of companies, they're gonna change the world, and then after like 5 years, a stock is like nothing; it goes away. So. Five. Everybody's getting picked. Look at all these people. Ace 101. Bulldog Trading. So if you win, I could send you a $10 Amazon gift card. You have to just email me to claim it. Because most people, I don't know their email. Or you can pick a ticker and I'll just do a DCF. So Savvy Money, Bulldog. Like people always say, let me know the next stock that grows 1,000%. The next 1,000x stock. I want 1,000 times my money. Like this, even if I told you the next stock that 10,000 X's or 500 X's, nobody would hold it for like 25 years to find that out. You get lucky and buy Dogecoin when it was trading at 0.0001 cents, or you could buy lotto tickets today. But it's like Amazon. Like even if I told you when I IPO, this is gonna be the biggest company in the world one day, or one of the biggest. So you could see it was 10 cents. Obviously, it wasn't 10 cents. It was due to all the stock splits. It probably started at $20, $30. It was 10 cents. Let's use a stock adjusted price. And then it got up to like almost $5. So it 50x'd. It 50x'd from 97 to 99. It 50x'd. And then it went from like $5 at a peak. And then the .com crash. Then it got pretty close to its IPO price. So if you got it at IPO, right, and you were up 50x, because I told you at IPO, this is the biggest stock in the world. And then 2 years later, you're 50x, and then you're back down to break even. You might jump off a bridge. You'd be so upset. But who could wait? Looking back, it seems easy, right? After 4 years, you were up. You had like $5 million in your account. Now you're back down to like 10,000. But But who could have waited 25 years to find out to turn that 10,000 into like 50 million or 100 million? Like it's, but this is like a one out of every 10,000 stocks, you know. But the thing is, even if you do have the foresight, almost nobody can wait several decades because it would be so hard to not sell. If it was here, how could you say 10,000 to $500,000? How could you not sell? Like, and then it went back down to 10,000, and then it went back up to 500,000. So at that point, you probably like, I just want to take in my profits. I don't want to. And then it went back down to probably like 50,000, from 10,000 to 50,000, and then it took off. It's so painful seeing losing that money. That's why I just try to buy and not even look at the market, or not even I don't care about my portfolio. But like, if you have like tons of money, like that's why people like who have so many millions of dollars, they can put $50,000 in like 100 different stocks, and even if one or two hits, they're doing well. But the problem is, if we put a lot into one stock and that stock does poorly, it could kill our portfolio. Horse, Corey. Well, is a moonshot. Okay, 14. Mando. Helios. Coupang. Yeah, I like Coupang also. I did a video on them. It's easy not to look at your portfolio when you're losing. I hate looking at my portfolio, but when the market's going up and I'm doing well, I could look at it every day. I feel good. But when it's going down, I try to avoid it. It's too painful. But I really don't look at my portfolio much. I could go months without looking at it, unless I have some cash I want to invest, then I look at it. Or if I want to sell something to buy something else, I'll look at it. But that was quick. Horse B. So Horse B, you can email me and I'll send you a $10 Amazon gift card, or you can pick a ticker and I'll do DCF. Horse B. But you don't have to do Amazon. You could do this with any stock. You can do it with like what's a stock that's only been around a few years? I don't know why I go back to Marvell. It just I want a stock that's not too big. 36 billion market cap. A mid-cap company. I mean, this has been around 22 years. So you can see the swings. Even, I mean, there's a huge run up. But like, you could have got Marvell at IPO. They might have done a stock split, but this says like $12. And you could have like doubled or close to tripled your money. Or if you didn't get an IPO and you waited and then it went down to like $5, they've done a stock split, so it's probably like 20 at this point, but we'll just use the stock, and 5 to 35. So you could have 7x'd. So you can see any stock. Of course, if you invest in a company that goes bankrupt, this doesn't work because you can't hold something, a bankrupt company, in the long run, even no matter what the price is. You could be up $50 million. If it goes bankrupt one day and you hold, you're going to lose it all. But I'm assuming the companies you pick are at least decent. I'll pick up ticker GFS. Global Foundries. Well, this is really new. It's 47 to almost 80. Now it's trading at an all-time low, which could be a good time to get into it. Okay. Isn't that? Aren't they down a lot? CRM. Oh wow! I mean, overall they're up a ton. Sheesh. See, even if you bought it before 2017, so anytime before 2017, so you had 13 years to convince yourself to buy the stock, you'd definitely be up at this point. Maybe you wouldn't be up as much as you were, but you would be up. And I'm sure it's going to come back at some point. But this seems like a good time to buy CRM because it's trading. It's pretty much at pre-COVID levels, back to 2019's price. So you avoided this big mess. Malta. Is that near Long Island? Saratoga. Boston Spa. Yeah, I went there once. Boston. I had a fake ID in college. It was Boston Spa. That's where I remember it. Yeah, it's Schenectady, right by the Capitol, Albany. Okay. Poppy. Oh, right. You won GFS. That's why you said I'll pick. I'm starting that hedge fund on Tuesday. The new job. I was only at the last place for a month. Decided to go to the hedge fund. See how the hope I made the right decision. Semiconductors. I think copper may be a good investment because of all the copper that's needed for like EV and EV infrastructure. I think copper is going to be in high demand. So foundry. Foundries manufacture semiconductors for companies like NVIDIA. NVIDIA is fabless. They outsource all their manufacturing to companies like this. The largest foundry in the world is Taiwan Semiconductor. They're also the largest semiconductor company in the world. They're bigger than NVIDIA. Although NVIDIA was bigger like 2-3 months ago, but Taiwan is now bigger. They must have dropped like 50% NVIDIA. Global Foundries, are they a Taiwanese company, Global Foundries? Right, Malta. We talked about that. Isn't there another Taiwanese company, Taiwanese foundry? What does anybody know? What's the other Taiwanese foundry? Or maybe it's a Taiwanese fabless. I thought there was a few. See, I'm at 32. They're trading at 39. $32. What? Yeah, Taiwan Semiconductors, definitely in Taiwan. But I thought there was another. I thought there's two other Taiwanese semiconductor companies. At least one, maybe two, or maybe three more. Himax is Taiwanese, right? Okay, that's the one I was thinking about. Yeah, Fabulous. So they've never been that low. 32. So when a stock goes down like 50%, like it has, is that a function of just the market, a bearish market, or was the stock, should it be at this level? Does it belong at this level? Maybe it does. Like lots of stocks were overvalued for a long time, and now they're coming back to reality. Like Nvidia, I mean, it was just so overvalued. And it was like, did they do a stock split? I thought it was like 800. Oh no, 800 billion. Maybe I'm thinking of it. Maybe I'm just thinking of market cap. Yeah, it was like 800 billion, close to 800, maybe like 7 something. I'm pretty sure. So 330. So it's like 55% from its peak, from its 52-week high. $346. I mean, even if the thing is, even if you knew, it was overvalued, it's like, do you short it? Because if you just time it, if you bought it here, right, it went from like, it was trading below 150. I mean, forget about March. I mean, it was trading at 50 when COVID hit. Even before COVID, it was 70. But so it went from like 30, 40, 50, 60, 70. COVID hit, then it falls to 50. So it goes from 50, say it doubles to 100 and you short it. I mean, you would lose all your money. If you keep shorting it, unless you caught it up here, like it's just, if I short a stock and I lose all my investment, I'm probably not going to keep shorting it. I don't just have the funds to just constantly short something. Because you could have burned through so much cash trying to find the right point. And even if you did get to it after burning a lot of cash, you might not even make that much money unless you caught at the top. Unless you bought it here, which had a fast down. They split last year. Yeah, I'd rather buy Global Foundries than Nvidia because I think there's a lot of upside potential for a company like this. Nvidia is just so overvalued. But the reason it got to that level is because of that. This is why the 31% revenue growth. That's what moves stocks. That's why Tesla was going up so much and Amazon in its early years, because the revenue was growing. They were still losing tons of money. They weren't profitable, Tesla or Amazon, for like the first 15 years. The revenue kept growing, so people kept buying. That's why Intel 5%. So it's been flatlining. And AMD, another stock that had huge growth. But I don't know. I mean, I could explain it, but I can't like. I wish I could be like make $1 million next week investing. I can't do that. I could explain it though, but it's different between explaining it and kind of like a baseball coach that can explain how to the right way to hit the ball and the right way to field, but he can't play baseball. He doesn't have that ability. It's kind of like me. I just don't have the ability to make a ton of money. I can make a little money, but not a ton of money. Okay. 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 Last raffle. 10, 2. 10. That's it. Buster K. That was fast. Okay, Buster K. Yeah, if you want me to do a ticker, or you can email me, or next live stream you can do. He probably left already. A lot of people come in and leave. What do you mean keep it? Like, don't delete any names. Just let it keep growing and growing. Okay. Yeah, I guess Buster's gone. So okay. Happy 4th, everybody. Thanks for coming. Yeah, maybe I'll do that. I could look at prior videos if I wanted to get the names from the previous weeks in order to start archiving. I could do that. So, okay. Have a good one. I'll see you next Saturday. Thanks a lot. Talk to you later.